Does manual treasury management and operations have your crypto business stuck in the slow lane? Scale up and speed ahead with Fireblocks, the #1 platform for crypto operations and trading pros that makes custody, settlement, and rebalancing quick and easy. Visit fireblocks.com to learn more. I'd like to also thank Kraken. With Kraken, you can instantly buy and sell over 50 of the most popular cryptocurrencies or earn additional rewards through their industry-leading staking service. Payouts are twice a week and you can earn up to 20% each year. Visit kraken.com/scoop to learn more. Eager to make more informed decisions around crypto using data you can trust? Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Maximize your potential with the leading blockchain data platform by visiting chainalysis.com now. Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, Director of News at The Block, and joining us on the other side of the mic is my guest, Charles Hoskinson, the founder of Cardano and CEO of Input Output Global. It's very great to have you here. Obviously, many people are familiar with your story, your sort of cult of personality, if you will. Thank you for coming on the show. Glad to have you here. We've been trying to make an effort to have the show be a destination for all sorts of different blockchains. We've had Vitalik on the show. We've had the founder of Solana on the show as well, Polkadot. We kind of want to make sure that we have a destination for anyone who wants to learn about the major blockchains to come, explore, learn, see the slings and arrows of building these things. Charles, again, thank you for joining us.
Thank you so much for having me on, Frank.
Yeah, like I was saying before we turned on the mics, I took to Twitter because sometimes I like to tap the sort of the following that we've been able to create at the block to get a sense of what people are interested in. So I asked, what questions should I ask you before we turn on the mics? And we got over 100 responses. So there's obviously a lot of interest in what you guys are doing. I think that over the past few months, there's been more interest in Cardano than ever before. I was reading the Wall Street Journal a couple weeks ago, and there was a Q&A about what ADA is, right? I think I saw Bloomberg wrote something just a few days ago about how Cardano is outperforming its rivals amid scaling fee momentum. But I want to sort of start with the origin story. How did this all sort of come to fruition?
Yeah, it's a really fun story. I got involved in the cryptocurrency space almost 10 years ago. Back in 2011, I was running around and, trading and mining Bitcoin. I even had some 5850s and Crossfire. That's back in the day you could mine on GPUs. And, we were always interested, like, what is the point of crypto? And back then there wasn't a lot of money to make. It was just kind of a fun side thing to do. And really, it was a vision of, well, how do you globalize business? How do you globalize the world? How do you preserve concepts like inclusive accountability, where everybody can check each other's work? So and when I send you something, do you trust me, or can you, on your side, verify that what I've sent you is actually real and legitimate? These types of things. And then big conversations about programmability of transactions, big conversations about governance. Throughout the years, as I got professionally involved in the cryptocurrency space, I started building blockchains. Like I was involved with the BitShares project and later on Ethereum. And for Cardano, I said, all right, well, this is my shot to do things in a very principled way. If you look in terms of generations with cryptocurrency, Bitcoin was the first, and that was really about just a decentralized movement of value. And is that even possible? Or do you need a custodian or a third party to be able to make it work? By 2013, people said, hey, this actually works. The problem with Bitcoin is it's kind of blind, deaf, and dumb. It doesn't know anything outside of itself. It doesn't have programmability, at least not enough to be able to do the things that we've come to know and love in the DeFi space at the moment. And Bitcoin is very expensive and cumbersome. It really doesn't scale. So Ethereum came around, and that's kind of like when JavaScript came to the web browser. You went from these static websites that were kind of, they could be pretty, but you didn't really have a dynamic experience. And then suddenly when JavaScript came, then you got YouTube and you got Facebook and you got all these cool new things. Well, similarly, when smart contracts came to blockchain, then suddenly you now have NFTs and you have DeFi, you have all this stuff that you could do now. The problem is that there's kind of three areas where you still need to do more in order for that to be useful at a scale of society. First, you need a situation where you can have millions and billions of users and your system can keep up with that demand and have predictable performance and cost. Second, you need interoperability because there are thousands of standards out there for a global financial ecosystem. You need to easily be able to move assets and users between systems. And then third, you need some way of making decisions. As these systems increase in complexity, you need some form of governance process where you can converge to changing things as new technologies come. And if you don't, you end up like Bitcoin, where everything is kind of like static. It just stays the same. And that's great if you're only doing one thing, store a value. But if you want to actually be useful for voting systems and be useful for thousands of applications and utilities, you need some governance process to change things. And normal governance processes don't work so well in the decentralized world. We always are used to custodians like Microsoft the Windows and Apple to the iPhone and so forth. We're not so used to this idea that somehow millions of people will just come together and make a decision as this big web of people without one person being in charge to coordinate it. So those were kind of the three challenge areas in 2015 when we got started with the Cardano project, to say, let's do the stuff that Ethereum and Bitcoin does very well. So let's have programmability and smart contracts. That's what the second generation was delivering. And then let's also be decentralized and be able to move value around. That's what the first generation proved. But let's somehow do that at scale. And let's somehow do that where it can talk to other things. And let's somehow do that with a governance system. And let's do that in a very principled way. So instead of just saying we know how to do it, let's write a bunch of papers. Let's go involve academics, go through the peer review process, and get independent oversight of whether the things we're saying are reasonable or not. And then based upon what we learn from this, we'll kind of understand the design space of what is actually possible or not. For example, when we started the project, we didn't know if it was going to be proof of work or proof of stake. And at that time in 2015, the consensus opinion in the Bitcoin space was that proof of stake is impossible. It was perpetual motion. There's still a lot of maximalists who believe that and say it's not secure, it doesn't work, et cetera, et cetera. But we didn't know at the time. And so what we did is, so let's just write a bunch of papers and either we'll be able to stumble on an impossibility result, which basically shows why it doesn't work, like the FLP impossibility theorem, for example, that's a famous one in distributed systems, or we can actually prove that it's possible and understand the trade-off profile between it and proof of work. So we've written over 130 papers now, and we've gone through a lot of generations of the software since the launch in 2017. And we kind of broke it down into eras, with Byron being kind of the introduction of the concepts of the market, Shelley being full decentralization of the system with proof of stake, Gauguin being the programmability, so that's adding smart contract support, which we just finished, and then Basho and Voltaire. Basho scaling the system up, and Voltaire turning on all the governance components of the system. And those 5 eras kind of cover those 3 areas of the roadmap: the scalability, the interoperability, and the sustainability components of it. And it's an amazing project. It's grown from just a few people thinking about it to about 2 million people. And just today we had $10 billion in transaction volume. Ethereum had 7. They paid 44 million in fees. And I think our fees, if I'm sorry, were like 50,000 or something like that. So it's a very efficient system, and we've learned a huge amount. And we've kind of evolved the state of the art of things like the science of proof of stake, and alongside a litany of other things. And we've attracted a huge following. And, there's almost 200 dApps that are under construction right now. Sunday Swap is one of the most prominent. It's launching tomorrow. There's several already running on the ecosystem, and smart contract support technically started just in September of last year. So it's pretty amazing to see how quickly that ecosystem's grown. The other thing is it's a very valuable project to the industry as a whole, because some of the design choices we've had kind of allow projects to look into the horizon. For example, Bitcoin runs on a UTXO model, Ethereum runs on an accounts model. If Bitcoin ever wanted to have smart contracts, they're not going to change their accounting model. So they need to look for who's doing smart contracts with UTXO. We actually figured out how to do that with something called extended UTXO. So developers who build dApps in our ecosystem, they're actually creating a blueprint and design patterns for how one would build dApps with Bitcoin if the expressiveness of the language was ever scaled up. Ethereum doesn't provide that clarity because it's a very different model. The same for the science of proof of stake. There's already several other projects like Polkadot and others who have been inspired by the Ouroboros protocol, and they've created variants of it or slight changes of it, and they've deployed that. So we've kind of provided a lot of insight on how to do things very differently from how Ethereum has done things inside the industry because of that first principles approach. And we get a lot of great feedback back and forth from many projects in the space because of that.
What would you say to folks who might claim or suggest that the smart contract may be live, but because of that EUTXO design, it's a bit messy relative to other blockchains?
Well, it's kind of funny because they actually criticize us for things that are the opposite. For example, they say, well, you have concurrency issues. It's like, guys, extended UTXO by design is the most parallelizable thing because you don't have to manage global state. You just have local state. And so it's very easy to do these things off chain. It's very easy to do things just with local. You have predictable cost, you have determinism. The problem is, it's like when we went from single core processors to multi core processors, you have to write your software differently in order to take advantage of that. And the issue is it takes time to learn how to do that. And you have to come up with design patterns and models and layer things together. And that's what's happening right now. And it takes 6 months to a year for the ecosystem to get used to that. So, for example, the first generation of DEXs are coming and they're already showing a lot of concurrency with Sunday Swap and Meld and all these other things that are hitting market. And that's just the beginning. The other thing is because of these design features long term, it's a lot easier for us to shard and it's a lot easier for us to introduce concepts like pipelining, for example, or DAG style architectures or these types of things. So it's the gift that keeps on giving. And it has a lot of desirable aspects when you talk about predictability of cost and performance, as well as verification of the underlying contracts. So when you want to certify something. However, it does require that the software be built a little differently. And so I thought about that a lot when we were architecting the system. And one of the things we conceded on in that architecture was allowing people to have multiple computational models. So in addition to having the extended UTXO and Plutus model, which we think is long-term the best bet, we're also backward compatible with EVM. And there's already a sidechain called Milka Media that's launched through another party called DC Spark that allows you to write Solidity code and run Ethereum applications on Cardano, just better, faster, and cheaper. And actually, part of the roadmap this year is to connect sidechains to it that further reinforce that model as canonical sidechains. So you have an accounts model there, and you have all the Ethereum tooling there and that network effect there. But then you also have a future oriented model that has a lot of benefits into it in terms of the ability to scale and to do things. And and this is not just us talking. I mean, we wrote these papers over a 4-year period, and they went through the peer review process, and they're based on about 30 years of programming language knowledge. And some of the people who designed this are professional programming language designers like Manuel Chakravarty and Phil Wadler. Wadler created Haskell. He worked on Java, Go. He's done consulting with Python, many languages, and his papers are voluminous, more than 25,000 citations, and big companies like Sun and others he's worked with in the past. And Manuel has a long pedigree, and others have. So these are people that for 30 years people have been trusting to come up with how to build a proper programming language. And these are languages that collectively control billions of dollars of value for Fortune 500 industry. But you have to understand, like, what are you trying to achieve? And there's always trade-offs here. And one of them is developer accessibility versus your quality and verifiability and also expressiveness. So you have two options. You can either start with minimal expressiveness, and that's what Bitcoin did with Bitcoin scripts. Say, create a very small surface, and you can only do a few things with that, but you can do them well, and it's easy to reason about security. Or you can do what Ethereum did, which says start with maximal expressiveness as much as you can get. And you can do lots of stuff, but the problem is some of those things may lead to the DAO bug or a litany of other problems that people have. So what we tried to do was kind of have a hybrid strategy where we were right in the middle. So we weren't quite at launch as expressive as Ethereum, and we weren't quite as draconian as Bitcoin. We were somewhere in the middle there. And then what you do is you work with partners who are building dexes and oracles and stable coins and other things. And then what you can do is say, did we get it right, that bet? Can you do all the things you want to do and get all these benefits, but we don't have the security problems? And if we didn't quite get it right, maybe we need to actually make the language a little bit more expressive. And we've already discovered there's some areas that the language needs to be improved in. And we have an improvement proposal process, just like Bitcoin has BIPs and Ethereum has IPs. We have SIPs. So SIP 31, 32, and 33, which will be with the Fossil hard fork in June, are actually going to add in some additional expressiveness, which will make it easier to implement DEXs and oracles and stablecoins and other things in the ecosystem. But despite that, there's still over almost 200 projects that are currently under construction, with some launching as of tomorrow. And there's already 3, 4 major ones that have launched in December and January. So we're getting there. And it takes a little bit of time to kind of build that ecosystem out, but it's moving a lot faster than Ethereum, pound for pound, day for day. And it really hasn't hurt the commercial adoption, our ability to navigate the Fortune 500 in government. For example, Dish is using Cardano. It's a Fortune 250 company. We have great reference clients in the government space, like the government of Ethiopia, and they're on target despite the conflict there to have 5 million users before the end of 2022 on the system. World Mobile is deploying a whole ISP in Zanzibar, which will cover 2 million people within 24 months. And that's internet across the entire country. And that's a Cardano native application. So we have dozens of things that are already running and they're there and with great development ecosystem and third party organizations like the Cardano DeFi Alliance, which just recently formed. And they actually provided us 6 pages of optimizations and notes of things that they wanted improved with Plutus and a lot of third party companies that are floating around that are building stuff. So it's a pretty vibrant ecosystem relative to the age of the ecosystem. And it's surprisingly fast how things have grown.
You guys are definitely gaining some momentum and traction in Africa, which is pretty interesting. And I want to talk about at some point in the show. But I kind of want to double click on the identity of Cardano for a second. When I talk with different developers across the crypto space, many have this idea that each blockchain will find a home in a very specific application, while we have a layer one ongoing turf war 10 years down the line, 5 years down the line, each will sort of find a home in a specific use case, whether it's DeFi, NFTs. NFTs might move to Flow or another blockchain. Solana is going to be the HFT transaction blockchain. Bitcoin's going to be sort of that store of value. When we think about Cardano, it seems like DeFi is the story you're trying to weave. You look at Sunday Swap, which is kind of the poster child of that. We did a sort of analysis on that where we looked at how the structure still kind of requires each transaction to wait in line. So you kind of have to wait for transactions basically because of the design. The way it ends up working is it ends up working like a queue. And that's sort of frustrating. So, how do you overcome that impediment?
Well, that's the case for all blockchain. I'm sorry, that's just how it works. They have blocks, and you have to wait for the heartbeat for a transaction to commit. I mean, you have to move literally off of the blockchain architecture in general if you want to go beyond that. Now, you can batch many events together and serialize them, and there's plenty of designs like input endorsers or DAG style protocols that allow you to do that. And actually, we'll have that before the end of the year with the input endorser design that's coming in October. So, and also there's a question of off chain versus on chain for these types of things. There are different areas, like we're dominating in NFTs. There's 2 million assets that have been issued on Cardano. You go to cnft.io and just see a sampling of it. And that's growing exponentially inside our system. And we're gaining a lot of momentum because of the native asset standard. It makes it cheaper and easier to issue an asset on Cardano than any other blockchain, I would argue. That it's since the NXT days, because we make special provisions in the system that your asset is treated the same as ADA is treated. Whereas Ethereum, that's not the case. You have to be an ERC20 token. You're treated as a smart contract, not the underlying asset. When Babel fees and other things come, you can even start paying transaction fees in your asset. You can't do that in Solana and Poly and all these other systems. You have to use the underlying token. Okay. As for DeFi optimization, Basho was really about scale. And what's so crazy is that people seem just in love with this idea that everything is static and it's going to stay the same. Every epic block sizes is increasing. Pipelining is coming in June, input endorsers is coming in October. So there's 2-3 orders of magnitude of performance to increase in a reasonable time horizon just with on-chain optimization, which makes it comparable to the throughput that you're seeing, real throughput you're seeing with Solana, especially given that UTXO allows you to batch transactions. You could put many inputs and many outputs in a single transaction event, potentially hundreds of them long term. You can't do that in a message accounts model. It's sequential. So this is what I keep saying. It's like people just don't know what they're talking about when they say, "Oh, you can only do one thing per an event." It's like, no, you can do massive amounts of things, but it's all about that interplay of on-chain and off-chain, and it's all about how you batch things and the design patterns that you use. And the fact that we have a lot of stuff built into the ledger that other systems don't have, you can highly optimize these types of things. Okay, so that's one really key point. Second, we have native sidechain support. That's what's coming this year. So let's say you just hate the model and you're really in love with this imperative accounts model that requires you to manage a global state. There's a BFT EVM that runs, which means you're comparable with Binance Smart Chain in terms of performance, and it's an EVM clone. So you get to reuse all your Solidity code, your tooling, and all the Web3 stuff that people are doing. And those contracts can call Cardano contracts and back, and you can move assets back and forth. It's just better, faster, and cheaper. So we literally support both models. The others don't. It's just there. That's a fact. They can ignore it. They can pretend we're not going to do it. Ethereum seems to get away with delaying its roadmap 5 years, 10 years, whatever long they want to push it out. No one criticizes them for that. Meanwhile, we just keep executing. The other thing is our upgradability is unparalleled. That's a huge competitive advantage. We have this thing called the hard fork combinator. It's very easy for us to seamlessly do hard forks inside the system and maintain backward compatibility. It's just a flip of a switch for the upgrade system. And there's a whole governance stack with Catalyst that sits on, which, by the way, gives us a huge competitive advantage in DeFi. Why? Because all these DeFi guys are centralized right now in terms of governance. And when Wells notices start flying out and regulatory bodies start coming in and saying, well, you guys look a lot like an exchange and you're not registered, these guys are going to be in a rush to DAOify themselves. And when that happens, every single one of them has to figure out, how do we build a voting system? How do we build a decentralized organization? How do we do all that stuff? You get that with Cardano. We have the largest decentralized organization in the world running today with Catalyst. Tens of thousands of people regularly participate in voting over 7 different funding rounds, $1 billion of funding in Catalyst, just making decisions about things. And those governance tools will be turned on for Cardano native assets, which means if you issue a native asset on Cardano, you get to reuse the same voting stack that people use with Cardano to decide hard forks and parameter upgrades and other things. And you get that entire DAO for free. You don't have to figure out how to build a voting system. You don't have to figure out how to do all these other things. And by the way, we also have identity. It's another thing very few people seem to think about, the metadata provisions we have with our transactions, which layer beautifully with extended UTXO very easily, because identity can follow the transaction. And the metadata field for each transaction means that you can put KYC and AML optionally into a lot of your business logic and your process flows. So when they come in and say, okay, we're okay with DEXs, but everybody has to be KYC'd, it's actually possible to do that in a decentralized environment. It's much harder to do that in an accounts-based model. It's much harder to know what's going on in an accounts-based model because of the nature of the model, and do it predictably and have a complete audit log and so forth. These are just things incumbent you get for free. And by the way, it's one of the most decentralized, 3,000 stake pools inside the system, significantly more so than Ethereum right now or Bitcoin right now, which are dominated by a small handful of mining pools, or the case of Solana or others, where a small handful of insiders run that protocol, and there's no way to decentralize it. When you look at us, it's parameterization. As the value increases, the K factor increases, means you get more stake pools. So as Cardano gets to Bitcoin level valuations, if it ever got there, you'd have tens of thousands, if not hundreds of thousands, of stake pools running the system, complemented by tons of validators inside the system. And you get that for free with good protocol design, and you don't pay a throughput issue. That as you increase that, somehow the network slows down and actually speeds up, because a lot of these things provide parallel services, like through Hydra and so forth with the system. So I reject the premise, and I think that there's so much misinformation that's being spread by people who only have a surface level or cursory understanding. And what's so frustrating is we write the papers. It's not like we're just saying stuff, Frank. We've published 130 papers, and they were submitted to academic conferences where people from MIT and Harvard and Yale and Stanford and accepted them. In some cases, 10% acceptance rate for papers submitted. And we survived, which meant 9 out of 10 didn't, amongst people at Cambridge and other places that submitted. For 6 years, I've been doing the work, writing the papers. They're all public. They're there. You can see which conferences they appeared at. We presented them. They have the math there. It's there. And we explain them. We write the blog posts. But yet then there's these people that run around and say, well, in my opinion, you're wrong. And we're like, okay, well then show us where. If there's a problem in the consensus protocol, tell us what the issue is. If there's a problem in the accounting model, show us exactly what we can't do. And then every time they say it, we demonstrate that they're wrong by growth. Like they said, we couldn't even run dApps on Cardano. Now they're here, and now they're saying they're not good enough. And then they'll scale, and then they'll say, well, there's another problem.
That's an important point to focus on here, where we can kind of talk all day long about the underpinning design that makes Cardano potentially better from other blockchains. But there's going to be folks, even potentially Cardano bag holders, who look at the landscape for decentralized finance and ask you, Charles, show me the money. You talk about Cardano being a very early nascent project relative to other blockchains. Solana kind of came on the scene far later, already has a decentralized exchange that prints 4 billion plus in trading volumes
But hang on, there's today, right now, a decentralized exchange running.
today.
Right now, today, it's Muesli Swap, it's running. Tomorrow, Sunday Swap. I mean, they're running, and they're all, but they're not good enough. There's not enough volume.
Well, what's the catalyst that will make them good enough in the eyes of the market?
But the market's already shown it's good enough because the valuation of Cardano is still up there in the top 10, and there's a 2 million person ecosystem and a lot of interest, and we don't lose our people. Our people are patient, and we continue to grow, and we continue to see overwhelming commercial interest to actually build utilities on the platform, from Fortune 500 to governments to individual people. IO, just my company, is at capacity. We have to turn down business. There's this bizarre thing like, well, the market hasn't accepted it yet. It's like, it's kind of a strange thing to say the market hasn't accepted a cryptocurrency in the top 10 with a 2 million person ecosystem. Every time we open something up, we're at capacity. We open up native assets, there's 2 million issued. We open up smart contracts, there's 200 dApps under construction. We open up staking, there's 3,000 stake pools. I mean, at what point do you start conceding, well, maybe there's actual real demand here? There's a lot of smoke. There's got to be a fire somewhere at the origin.
I think it's a good point. I was only responding to the premise that you made about people kind of moving the goalpost on Cardano, which is we have these dexes in the work. We have made these improvements. We did the rollout of smart contracts. The sort of Q issue is not that dissimilar from other blockchains. You're putting this out there, but people are still not satisfied. I was asking more so, at what point do we see big names akin to the big names we see in Ethereum and Solana DeFi?
You'll never see a lot of those big names because they can't get the same deals they have. If you look at the amount of insider holding of Solana or these other cryptocurrencies, a small group of VCs, invested interests, got the tokens early, and they make a windfall profit if these things are successful. It's just a fact. You could look at Masari tracks it and others track it, insider holdings of these systems. And so if you don't give anything to the people that own the media, the people that own the VCs, they're not going to talk your book. That's just how it is. And so you don't play to that crowd, you don't play to that audience, they'll never love you. It's like being Mitt Romney and trying to get Democrats to love you. It's not going to happen. Okay. So what you got to do is instead is say, well, what are the goalposts in terms of use and utility? So in 2014, I did a TED talk and I talked about microfinance and remittances in that TED talk, and about how I felt blockchain was a transformative technology to onboard 3 billion people and give them economic identity that they lack. Because right now they're paying 85% interest rates. So to me, here's a practical litmus test of whether we've delivered on a promise. If we can have a marketplace where you as a user have a beautiful wallet interface and you're able to take a stable coin that's running on Cardano and find somebody who has an identity that's registered on Cardano in the developing world, click them, send them a loan like you would with Kiva, and they can pay you back completely through Cardano with that stable coin. That is an example of a transformative event. We've circumvented the entire banking system, the entire credit scoring system. We have a direct to consumer lending product with an asset that is stable because of an algorithm running on a completely decentralized infrastructure. No centralization, end to end, totally peer to peer. That's going to happen this year with Possessia. It's a firm in Kenya. And Jed, it's a stable coin being built by an Israeli company called Cody. And we have a light wallet product that's coming in this year that will be able to host that infrastructure. And it's a third party module that can hook in. And there'll be a blockchain based identity. And with Prism, that's something we built. We tested the scale of 5 million users in Ethiopia, 8 million with Dish, 13 million people just there. And you can build a reputation system. Now, that's just one of dozens of examples of real life things that if that happens, it changes the lives of millions of people, but also it's a good investment for people. Why? Because these loans with Possessia currently have a 3% per month premium, 36% per year. It's very hard to find things in the Western markets that give returns like that. So greed will compel millions of people to come in and move value from one side of the table to the other, and then suddenly you have all this direct foreign investment entering Kenya, which lowers the microfinance rates. And they go from 36% to 15% or something like that from competition. So you gave people economic identity, you gave them access to global markets, you gave them an asset that's better than the local currency, and you did it all without any middlemen. And you've completely disintermediated a corrupt financial institution that takes $7 out of every $10 for these types of transactions and ultimately made people's lives better. Okay. That's an example of a goalpost that I think is obtainable, and it shows the reason why crypto's here. I don't care too much about the 25-year-old dude living in his mom's basement in New Jersey that's chasing yields and, swapping NFTs here and there and trying to find the next delta of 5% or 10% every day. That's a Ponzi scheme, Frank. It's not sustainable. You can't have 10x's every month. You can't have like people make money for nothing. It's whenever the musical chairs is over, somebody's not going to have a seat there. And that's going to be regulated out of existence anyway. I care about the 3 billion people who don't have economic identity. And the point is that Cardano was built to scale to their needs and be able to actually deliver products to them. We spent 6 years of our lives chasing that, at least at my company. And if we can survive there, we're by definition better, faster, and cheaper than the Western world because the poorest people in the world can't pay legacy fees. So if we can make it work for them, then we're actually the cheapest and best option for the Western market as well.
One of my favorite Dire Straits songs, Money for Nothing.
Money for nothing. Yeah, exactly.
That's a great song.
Or Steve Miller, Take the Money and Run.
That's another great song. This is
Yeah.
this is this is you're kind of unpacking the Frank tier playlist that my college roommate made for me, and it's basically just dad rock, or barbecue dad rock.
See, I grew up in Hawaii, so we were like
That's
20
right.
years behind the curve. So everything that was like new in the 70s and 80s was how I grew up in the 90s
Well,
there.
maybe that's why you're such an old spirit.
Yeah, that my mom.
Yeah. Well, I think it's interesting. You've kind of, I don't know if you were kind of going this direction on purpose, but you're wading into the VC question of the value of VCs in the crypto world. You kind of poked a little bit of fun at some rival blockchains for their backers. I've had some Cardano projects that obviously have VC backers or have kind of bootstrapped from venture capital interest. But just looking at the general question of, do VCs add value in crypto? You kind of are getting it. That would get you into the sort of Jack versus Mark Andreessen back and forth. But do you inherently view them as being problematic?
It's perfectly fine if you're talking about a DeFi application or a business that's augmented by blockchain. Let's say your game development studio and you want to start integrating NFTs and some of your account features or an in-game currency. So you're still centralized, but components of your game can be liberated from the game and they exist in decentralized infrastructure. If a VC comes in and invests in that whole scheme, what's the problem there? Nothing. It's just this good old fashioned better mousetrap, better business model. Where it gets complicated is where on one side you say we're democratic, egalitarian, we're open, we're transparent. Oh, but by the way, there's this group of people that have a fiduciary obligation to get money for their LPs, and they're insiders who launched this thing. So you got to pay them first and buy them out, and they get their 10x, and then we can be decentralized and egalitarian and all these other things. I'm sorry, it never really works that way, especially with proof of stake systems because they're plutocratic. So you don't ever have to give up control. If four guys control more than 51% of the floating supply, those four guys for the rest of their lives, is until they decide not to, own the system and run the system with proof of stake. And that's just how it works. And all that value appreciation, look at Doge. This is one of the reasons why I got a little edgy about Doge's rise. A small group, 0.1% of the wallets, control more than 50% of the supply. And just they were lucky enough to have that. So what all these retail investors were coming in and pumping up the price, and the guys who were running that they're profitable at selling at almost any price point. They were dumping on retail as all these people came in. So, I don't like arrangements where a small group of people, when you assert to be decentralized or egalitarian or transparent or fair, have a built-in competitive advantage over everybody else. I mean, the whole point of decentralization is get rid of that. We're supposed to get rid of central banks and oligarchies and cartels and institutions that run everything. But it's a philosophical differentiation. People can not value that or not care about that. We can look at historical performance of VC coins like EOS and ICP and others, where they have not met expectations or they've underperformed. Others seem to be doing somewhat better, like Poly and Solana. It'd be interesting for someone to write a paper about that. But it is important to point out that the two biggest coins on market right now are Ethereum and Bitcoin, and they're both non-VC coins. They were both open in their distribution model. One was proof of work and the other was the open ICO. But in both cases, a VC was not required to bootstrap them. And I would argue that that's probably a superior model for layer one infrastructure. I'm agnostic to whether that's a superior model for DeFi, layer two infrastructure, or other utilities. The jury's more nuanced there, in my
Well,
view.
now we kind of have an alternative to the VC in a DAO structure. I remember, and you probably remember back in 2017, people would don shirts that would say that ICOs will kill the VC structure. Now we're hearing that again with the DAO. There's a lot of VC money floating around in the crypto space right now. So it's hard to completely squash that or kill that. But do you see the emergence of decentralized autonomous organizations giving VCs the proverbial run for their money in funding the Web3 wave?
Yeah, because we're already doing it in Cardano. There's $1 billion of treasury funds in Catalyst, and over 300 ventures have been funded since Catalyst was created last year. And that's completely community controlled. There's no centralization there. 70,000 people participated in the last funding round who voted. So anyone, you, me, anyone in the world can submit a ballot, a proposal for something that they want funded. And a lot of people are getting accepted. And the rounds keep growing in size, scope, and scale. Not only do I believe the hypothesis is true, we've seen it in practice with what we're getting started with Cardano. And a whole bunch of things are coming this year, like voting centers that built right into the wallets and all kinds of things that I think will get us greater than 50% of the network participation on a regular basis. And the emissions will grow too, from I think 8 million of funding round to 16 million or greater. And combined with stable coins, you can actually take funding in an algorithmic stable coin as opposed to just stock ADA, which means you have predictability of value projected over time. So it takes a little more creativity to do these types of models, but it's definitely something that can be done. And again, that's another value proposition of Cardano. If you want to bootstrap or fundraise something, you can actually just eventually send money to Catalyst and let the community decide on its distribution. And we've kind of seen projects like Gitcoin or other things do that in certain verticals, and they've been quite successful in those verticals. The other thing is actually the stake pool model creates a new funding mechanism called the ISPO. And it's a really interesting model. So how it works is that you set up a stake pool and then somebody will delegate to you. And normally the fees that are accumulated if the pool does the work go back to the person who's delegated minus the fees of the pool. And the pool fees are generally pretty low. They're between 1% to 5%. But what if the pool keeps all the fees? And in exchange, they keep the ADA or whatever the asset is, and they give you a token for another ecosystem. So Sunday Swap, Meld, and others did this, and they actually Meld, I think, used it to raise more money than Ethereum raised during its ICO, and in just a short period of time. And Cointelegraph wrote a lovely article explaining that mechanism. So that's a completely new fundraising model because what's interesting about it is that there's no transfer of value from the investor to the project. It's just they give access to their staking rights and the revenue derived from that, but they actually didn't buy anything. They didn't transfer any ADA. So they don't take very low risk. They're just surrendering future income to project finance something. The other thing is it's almost like an approval pool because if the project loses faith, people pull their delegation, and you can do this at any time. So those are innovations in fundraising, and they allow you in the 7 to 8 figure range to get the resources you need, which traditionally is where you would sit during the seed and Series A rounds of a traditional VC. And by the time your project's successful, if there's a token involved, you're already liquid. So you don't really need the VC for Series B, Series C, the IPO, these types of things. You're already there. So
Just what we need, Charles. Another acronym.
yeah, ISPO. It's the new thing, and a lot of people are doing it. ISPO.
Let's get ISPO to catch on.
Yeah, and so, but that's just an example of innovation. We didn't even create that; just the community came up with it. It surprised me, and I said, "Well, that's a pretty smart idea." And actually, show you the interplay between what the community wants and protocol developers. We're like, well, people want to exclude U.S. participants. Well, you can do something called contingent staking. So what you can do is say, "Hey, if someone is delegating to me, I have to sign it for the delegation to go through." So it's multi-sig. But what you can do with an identity system is when they delegate to you, have identity carried with the delegation transaction to verify if they're a US citizen or not. And if you can't verify, then you don't approve the delegation. So you actually have a very easy way of blacklisting US participation. And it's just like a few little minor software twerks to enable this to happen. But that's the power of models that Cardano is bringing, is this just beautiful flexibility where when you've interplayed clever architecture and engineering with clever identity, then suddenly it's very easy to know who your customers are. The same, by the way, for the infrastructure bill that just got passed. Until they fix that, we're in a situation in the United States that every single stake pool operator, whether they're doing Tezos or they're doing Polkadot or Ethereum 2 or any of these systems, has a reporting requirement to the IRS about the people who have delegated to them. And if they can't report that, they're actually not in compliance. It could be fined. So how do they report it if it's a push transaction? It's like if somebody sends you a Bitcoin right now, how do you know the KYC information on where that came from? It's a push transaction. You didn't consent to it. It just appeared in your wallet. But under the current infrastructure bill, you actually have to report information to the IRS. So if your technology is built the right way, you may be able to actually comply with that. And I think we can have that before the end of the year, before the 2023 deadline comes into play. So there's a lot of nuances here.
Hopefully, our crypto policymakers, and I think a lot of them are hard at work at getting that language to change. Obviously, everything is a question mark when it comes to DC. Having trouble keeping pace with the crypto boom? When your business is scaling up and your portfolio is growing, you don't want to waste precious time on manual treasury management or settling and rebalancing. Fireblocks can handle that for you with smart, scalable solutions for your crypto business, along with industry leading security and expertise. They'll take care of the back end so you can focus on the big picture. Visit fireblocks.com to learn more. For the last 10 years, Kraken has been known as one of the best platforms for trading crypto online. Now, with the new Kraken app, it's easier than ever to buy and sell over 60 of the most popular cryptocurrencies on the go 24/7. Simply download the Kraken app, connect your bank account, and start investing for as little as $10. Just a minute is all it takes to get started. Are you eager to make more informed decisions around crypto using data you can trust? Chainalysis is here to help. Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Gain unparalleled visibility and maximize your potential with the leading blockchain data platform by visiting chainalysis.com now. I want to kind of reframe or re-ask a question. I want to juxtapose a lot of the sort of bullish aspects of Cardano that you see in terms of the robustness of the community, especially outside of the US or offshore, the amount of money that's in the system, the technological kind of improvements that we see with various different things like ISPO or the sort of Alonzo hard fork. We didn't really talk about that, but that's definitely going to change the trajectory for Cardano. But there's still this question: when will we see more dApps on the network? And regardless of the degree to which developers are building on the network, why do you think people still have it in their head that there's no activity on Cardano?
I think there's a latency between when you do something and when the perception catches up. For example, let's say there's a scandal at an institution and they completely rebuild the whole thing, fire all the people. You ask people 2, 3 years later, what do you think of that institution? The first thing they remember is the scandal. So there's this stickiness to negative news or perception, positive or negative, and it just stays for a while. So, one of the things we did very poorly as a project, I'd say, is expectation management and communication. So we kept saying, hey, these things take time. It's a systematic rollout. We're focused on correctness rather than scale and expressiveness to start. Scale and expressiveness come later because correctness, you can't really roll that back. If you screw something up, you lose people's money. It's always okay to inconvenience something. It's not okay.
You're referencing obviously the DAO hack and the impact on your reputation.
Yeah, exactly. It's okay to like inconvenience someone. It's not okay to lose their money. So that's why we chose that priority. But because you do that, you're a little slower to the gate than others. And so when people do their first pass, they develop an opinion either there's nothing there or what they're seeing is not meeting their expectations, in which case they discount you and write you off. And even if you've changed the situation, because they've already formed an opinion, it's not easy for them to go and walk that back, especially if they've made broad, bold proclamations to the market. And many people have actually come out and said, well, it's a Ponzi scheme or it's a scam, or it's a science project and it never will do X, whatever X is. Well, when you've said that to 100,000 people and your credibility and reputation is on the line, how do you then go back and sheepishly tell people, oh, yeah, well, I got that wrong. So sorry about that. And there's so much confidence in these people. Like when Polymarket said, there will not be smart contracts on Cardano before October. I took the bet. They lost the bet. They had to pay, you know? So part of it is just people took positions and they got it wrong, and now they are trying to figure out how to walk it back. Part of it also is that you have to have your dApps have valuations that people care about. So that dApp portfolio, a lot of those tokens have to start getting to unicorn status, hundreds of millions to billions of dollars of value. So if Sunday's on market and it's worth $1 billion, or Meld or whatever is on market, it's worth a lot of money, then it's super hard for people to say there's no dApp activity because you could just like show them coin market cap and say, well, look at all the things here. That's the Cardano portfolio. Oh, I guess it's real, And so that takes time to mature and visualize. For the longest time, I remember this in the Ethereum space because I was around. The Bitcoin maxis were like, Ethereum will never work. It doesn't exist. It's a science experiment. And for about 2 years from the launch of Ethereum, we really didn't see enormous traction. And ironically, it was CryptoKitties that was kind of the viral moment. And then things started clicking up. And then there was the Ethereum Alliance that came out. And like all these big companies started doing things. And then Ethereum got big. And then suddenly, oh yeah, Ethereum's big. It's real. And now the criticism has changed a little bit. But it used to be it will never deliver on the mission and promise that it has. So there's a latency in these things. And I think it will take probably 1 to 2 years for that latency to move through. But the question is, where does that hurt you? It hurts you if you are in California in Silicon Valley going to a venture capitalist saying you're a Cardano organization and you want to build a Cardano native app and you're looking for some VC money. But then you have the alternative of different fundraising models that are probably superior. Okay. And that only hurts you for a period of maybe a year to 2 years. Where does that hurt you? It hurts you if you're going out trying to convince somebody to give you lower cost deals on infrastructure. Like you go to Ledger or Trezor, say, hey, we should be on Ledger Live. Well, okay, yeah, we'll give us $250,000 or something, and then we'll do it. Well, if we're a larger standard and they perceive there's a lot of things, maybe they charge you 100,000 or they do it for free.
Does it hurt? Does it sort of impede the ability to lure or woo developers? Because this is a big problem, right?
No,
I mean,
no. The Plutus Pioneers were two objective metrics there. Each class was oversubscribed. We trained 3,000 people. Our developer Discord has 11,000 people.
where'd they come from?
Just the community. We opened up class. We said, hey, who wants to learn how to develop on Cardano? Some came from Ethereum. Some were outside. Some were in the functional programming space. Some were just fans who believed in the mission that wanted to learn how to program. So all around, 11,000 developers in our developer Discord. And we're right now in a situation where expressiveness needs to improve. So the developer experience is for the advanced user. The second half of the year, it goes to the less advanced users. So you don't want too many because you don't have resources to handle that many people. And you're really talking about very complex things. But despite that, 11,000 people, there's about 75,000 Solidity developers out there. The last estimates that I saw, 25 million developers in the entire world for all development. So the fact that we're not even fully open for business yet, we're still kind of in the beta phase, and we have 1/7 of the developers of Ethereum, and we just opened for business for that Plutus smart contracts in September. I think it's pretty bizarre for people to say there's zero developer interest. First, when they say it, you say, well, what metric are you looking at? Because we have an open Discord, you can join it. And the two Plutus Pioneer cohorts we did both had 1,500 students who sat through, I think, 8 weeks of training each. And they asked questions and we had high engagement and these types of things. So they're there.
Just to zoom out, to be fair, wasn't necessarily saying that there's zero developer interest in Cardano. There is just a very small pool of people who have the skills to sort of do this type of work. And you have tons of projects throwing incentives, piling on incentives, launching these various incentive programs to vie for that very unique talent set.
Yes and no, because first, with the theory of interoperability, Solidity developers on Ethereum are Solidity developers on Cardano. So those are directly applicable things. Second, you're only ever going to get somewhere if you have the capacity to train people to build on your system in a reasonable period of time. The vast majority of long term growth in the space in 3 to 5 years is going to come from those 25 million non blockchain developers, and asking the question, how do you make them blockchain developers quickly? And so the more usage of DSLs and the more usage of off-chain infrastructure using conventional programming languages like Java and C++ and so forth, the easier it's going to be to attract them, retain them. And one of the powers that we have is we control the academic side. It's very easy for us to create blockchain training programs at a lot of major universities. Like, for example, you go to University of Edinburgh right now, you take the blockchain class there, it's a senior course. Cardano and Haskell are the languages of choice there. We get that for free. And there's dozens of labs around the world that are doing these things in addition to the external trading programs you have. So it's a multi-computation model, and part of it is adopting some of the industry standards that are accumulating and forming, and part of it is doing new things, and part of it is wiring your things with old things like JavaScript and Java, and then you basically focus on utilities. The other thing is, when you're talking about Fortune 500 or government, the developer has zero choice in the matter. They have different objectives. They're told what they need to build and do according to some standard, and that's either consumer protection or maintenance of a large scale product line that they have. And there they care a lot more about correctness and disaster recovery than they care about accessibility. If you're Microsoft, you got 3 billion users, you're not exactly looking to quadruple your user base. Okay. But you want to make sure that you don't get a class action lawsuit from your 3 billion users. So you want to make sure that everything you build is good. So when you enter into that vertical and say, we're the group that you can do formal verification and you can get mathematical guarantees that the software you've constructed is right, that's a much more appealing argument than going and saying, well, we have a JavaScript like development experience. And by the way, it breaks all the time and $10 billion has been lost. Okay, you'll saturate the script kiddies, but you're not getting the real actors. And you only need one of those real actors to get 3 billion users. Look at the Dish deal, 13 million across their infrastructure, 8 with just the boost. And that is the gift that keeps on giving. And that automatically puts you in the top 5. That one deal for utilization of all blockchain projects, including Bitcoin. And there's dozens more to win. And in some cases, regulatory requirements on how these systems work.
You look at the landscape, and more large technology companies are viewing the metaverse as their entryway into the crypto market. There's a kind of dystopian outcome of the metaverse, there's a utopian outcome of the metaverse. Cardano aside for a second, I just want to think, or I want to sort of unpack your view on what the metaverse can be and the extent to which it is the entryway for non-crypto native folks to make their way into this space.
There's two great books, The Infinite Retina and The Spatial Web, and they kind of talk about where is the web going. So back in the old days, we had network computers and databases, and then somewhere along the way we got Web 2.0, and we went from these servers and network computers and browser experience to the social web. So we had cell phones and programmability, and it's kind of a two-way relationship. And then everybody started talking about this idea of a semantic web, where they started saying, hey, there's this web where there's context matters. So when you look at Greenhouse, depending upon whether you're at a website that talks about painting homes or a website that's talking about hydroponics, even though it's the same words, it has a different meaning. The semantic web is now starting to turn into metaverse, and metaverse because there's a VR AR component. So you're taking all this other stuff, this context awareness and AI and social search, and so forth. And you're kind of embedding it in this spatial thing where suddenly now there's a world and I'm physically exploring or digitally exploring that world. And also I'm pulling elements out of that world.
Well, is this overly sophomoric or simplistic to describe it as Web 2 in a way that you can experience it with more of your visual senses, but even with more of your broader senses? It is a immersive version of Web 2 that, if on a blockchain, can be more decentralized, and less sort of controlled by these centralized powers.
Yeah, we're getting there. Let's talk about that. And that's why Spatial Web is such a great book because it actually kind of says, well, where does the blockchain part fit? So, one of the things about going to this three-dimensional world is you start thinking about what does real estate look like? So, in the conventional web, your domain name is your real estate. Microsoft.com, Google.com. And if you bet right, fuck, you make money. Like, could you imagine owning sex.com or, something like that? You can retire off of that domain name selling that. It's big buku money. So what's the real estate in a three-dimensional world where there's digitalization and physicalization? So you take things from the physical world and you bring it into the digital world, take things from the digital world, bring it into the physical world with AR. That's NFTs. That's the real estate. So if you bet correctly and you have the right NFT and it's embedded in the right metaverse, and that becomes the canonical metaverse that everything is kind of interconnected with, then suddenly those NFTs become worth a hell of a lot of money. So I think that's where the blockchain overlap comes from. There's also a question about utility and access, data management, address management, all of these things. And that's where the blockchain component really comes into it. It's the permissioning and rights and access control systems in this emerging world that's coming. The alternative is that a small cabal of oligarchical companies like Facebook and others basically act as the backbone for that, and they own the address space. Could you imagine if Microsoft is the sole entity that gets to decide whether you can register a domain name or not? How would the web work? It would be disastrous. And that's effectively what Facebook is trying to do. They're trying to own the backbone of the metaverse to an extent where your on and off ramps, they control the address space, you control scarcity, the marketplaces, all these things they control. And everything you produce within it, they have right of first refusal on the intellectual property for these types of things. So blockchain is kind of the liberating function, which says, no, 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 no. There's a neutral protocol that sits there and kind of coordinates and organizes all of these things, and does so in a way that ensures that some private company doesn't have total dominion.
Is there a way for Facebook to be relevant in a decentralized metaverse? If we were going to play devil's advocate maybe for a second, is there a way for them to coexist and maybe get early on what would be a decentralized Web3 by doing this?
So the way to think of it is like rivers to boats. So the problem with Twitter and Facebook and on LinkedIn and all these other things, they own the river and the boat. So not only is the boat the website, the interface, and the sailing and the place to get to places, but because they own the river, they can decide who can sail on the river. So when you get deplatformed from Twitter, you don't just get like blocked from twitter.com. You lose access to that entire social graph and all those people you interact with and talk with. Under a Web3 model that is decentralized, if I, as a centralized provider, block you, what I'm saying is you can't sail on my boat, but you can always find another boat and get on that same river and go and sail there. And you don't lose the river. The river is the people, the connections, the relationships, the reputation, all of these types of things. So Facebook is huge scale. It's billions of people across all their product domains from WhatsApp to Instagram to Facebook, et cetera, et cetera. Great. They can own a boat and they can provide an experience and they can provide hardware like the Oculus and other things to help you have a wonderful time while you're in the metaverse. But if Mark gets what Mark wants to get, he's not content with having the boat and owning the fees he charges for sailing on it. He wants to own the river too. And then because he owns that, say no one else can sail on it. And if you screw him or he don't likes you, then he'll prevent you from ever accessing that whole thing. And that's morally wrong because that's where the majority of growth and commerce is going to be conducted in the next 50 to 100 years. So you're giving a private citizen and a private company basically dominion over rights, economic identity, speech, commercial activity, freedom of expression, all of these things. One guy gets to decide.
Yeah, definitely don't want that. What keeps you up at night? What on the horizon worries you and may throw cold water on everything you've worked so hard for.
Well, one of the things that bothers me is this mantra, and this comes from Silicon Valley. I'm kind of the anti-Valley guy, if you can't tell. I live in Wyoming and Colorado. I don't step foot in the Valley. We don't take money from them.
Well, you're kind of this international man of mystery. I think I've seen you on camels, and you've been to Mongolia. You were born in
Yeah, I've
Hawaii.
been to 70 countries, but I have a large ranch, a bison ranch in Wyoming, and I try to keep grounded in the earth and animals. But my problem is the valley has a very specific mantra, and that mantra is growth at any cost, move fast and break things. The wrong way can be the right way. It's all about who's first to market, who's first to get the customers. And the problem there is if you have no values in the way you grow, then you attract a type of growth that ultimately is dystopian. For example, let's say you don't care about decentralization at all. It's all about just get as many dApps as possible. Well, if those people end up having a say in the evolution of the system, they're always just going to vote on performance and optimization and operating cost. And because they don't care about decentralization, if you end up putting the whole thing on Amazon, who gives a fuck? It doesn't matter. It's all about growth. So that's one of the things that keeps me up is there's real philosophy in the products we build and the industry is supposed to build. Say what you will about Bitcoin, it's a philosophically pure ecosystem. It's so much so that it will forego commercial opportunities in exchange for preservation of that philosophical purity. That is important if your end goal is to create sustainable rule of law across a global order. If you want to have a situation where everybody's treated the same, Facebook can't come in and take over everything, or Amazon can't come in and take over everything. You have to hold the ground. You have to hold the line. And if the wrong actors win that don't give a shit about any of that, it's all just about making as much money as quickly as possible so everybody can buy their lovely Lamborghinis and property. Great.
Or their large ranch.
Oh, they're large ranches. If that's the only thing they care about. By the way, I was in Bitcoin since 2011. I did pretty good. Bitcoin was cheap back then. So if anybody cares about that, then at the end of the day, you have achieved nothing because what you've done is you've replaced one centralized curated system with another centralized curated system. It's like overthrowing a government. If you go from a king to another king, you really haven't changed anything. You'd like to say, I've gone from a king to a democracy. I've gone from this bad state of affairs to something better. When we had the revolution in Russia and they overthrew the czar, they went to a communist dictatorship. Not exactly an improvement over the czar. In America, we got rid of the king, we put in a republic. It was an improvement. So that's the thing is we have this legacy system and it's not all bad. It provides some real value, but it's obviously creating problems. It creates wars. The monetary policy is terrible. We lose 20% of our value with inflation just the last 18 months. There's a lot of dishonesty. There's a lot of bureaucracy. So many horrible things have happened in this global order. And by the way, it disenfranchises 3 billion people, and they live terrible lives where they have to worry about war, famine, and disease on a regular basis because of this global order. So our space is coming in saying, on a white horse, saying, we have the solution. We can solve this problem. But the only way you're going to get there is by actually being honest with people and following what you've put on the label. You can't say decentralized, but say, well, it's inconvenient to my growth model. So I'm just going to throw it away so I can go make some money and move fast and break things. But trust me, once I'm the market standard, I'll be real honest and flip it back and figure out a decentralized protocol. No, it doesn't work that way. Google used to do that. It says, don't be evil. Yeah, they don't say that mantra much anymore now, do they? Right? It's your aspirations always get corrupted when there's real stakes and also decision makers at the table that can force you to behave a certain way. It's easy when it's just two guys and they own all the equity, but the minute you're a publicly traded company and regulated and all these other things, suddenly those two guys don't have a say anymore. That's why you have to start decentralized and start with principles. And those are inconvenient. I was around when Mt. Gox collapsed. One of the things that impressed me more than anything else about Bitcoin was every single core developer of Bitcoin, including some who had millions of dollars of their money in Mt. Gox, held the line and said, we're not even going to intervene or do anything. We're not even going to suggest the notion of reversing some of these transactions to reimburse us and get our money back. No bailout. Bitcoin doesn't do that. Personally accepting that they were going to lose millions of dollars of their own money by that decision. That was the moment that Bitcoin became Bitcoin, in my view. It was different from the financial order. In 2008, they're like, Bush said, hey, we have to abandon free market principles to save it. We got to do a bailout. Obviously, you run it until there's the exception to the rule. That's how we're used to things. And then suddenly Bitcoin comes around. There's a scandal. There's a problem. You'd expect a bailout. You expect some intervention. And they say, nope, that's the way the system works. You just have to accept it. That's different from everything else. And that's why it's still number one. That's why it's still on top, because it has those principles embedded in it. You ask me what keeps me up at night. My belief is that if we abandon that, or if people win who don't care about that, then the space has effectively become co-opted, and it's transformed into something that basically is not recognizable to what we all started with.
What's the quote? Power tends to corrupt, and absolute power corrupts absolutely.
Corrupts absolutely. I love Abraham Lincoln. He said, if you really want to get to know a man, give him power, and then you'll understand who he is.
When you look at the political landscape, is this something that you, first off, is this something that you think about outside of your day-to-day work with Cardano? And what do you make of the direction of the country and of the world? There's obviously, it's almost trite to say, a lot of animosity between different political spectrums. Is crypto a potentially apolitical force that could do what was promised in the origins of Bitcoin, which is kind of break down these power structures and implement new ones, or that's pie in the sky?
I think the easiest way of understanding crypto, if you're a Warren Buffett or Ray Dalio or some these old billionaires that kind of are market guys, they say, "What's the point of it?" And they're looking at it like a Silicon Valley guy would, who say, "Well, what's the use of utility?" We're not there yet. We're getting there, and I'd say 5 to 10 years, your valuation of these cryptos and your place and purpose of these cryptos is about what they do for society. Right now, crypto as a market is basically a pricing mechanism for the loss of faith in institutions. That's how I view it. So if you think the Federal Reserve isn't doing its job, or the CDC, or the Bank of England, or the EBA, or the Bank of China, and you're losing faith in the rules based international order we currently have today, your opt out, your short of institutions is effectively crypto. And we've seen a huge wealth transfer. If you look at anybody under the age of 30, there's a perfect correlation between asking them two things. Do you feel the institutions of society are better or worse? And do you own crypto? If they think it's worse than it was 10 years ago, almost like 95% of them own crypto. So there's a perfect mapping there between people who are thinking our institutions are falling apart and people who are opting out and developing something. Even nation states are doing it now. El Salvador is like, well, the IMF is shitty and this is shitty, and we're just done with this international order. This is crazy. So they adopted Bitcoin as their national currency. A literal nation state is opting out of the state of nations and going in a different direction. And Turkey's considering it, and Brazil's considering it, and so forth. So I think that's one way of looking at it is, where are we at politically? People are fundamentally unhappy with the institutions that manage society. The problem is institutions are necessary for complexity. Think of a hospital. You go from a doctor to a hospital. What's the difference? The doctor could probably treat a lot of stuff individually. My chest hurts. I'm having diarrhea. I'm having some issue. Okay, here, take this medicine. When you look at a hospital, that's where they can do surgery and complex procedures and complex tests and take care of you long term. Well, a hospital's complexity as an institution is much higher, and your level of trust you have to have in that institution for it to operate is very high. You trust them to put you to sleep. You trust them to cut into your body. You trust them to, like, if you get a gunshot wound, you don't go to a shaman. You say, take me to an emergency room. Now, what if the institution loses faith and credibility? What if you believe the hospital is going to kill you?
Well, maybe you go to the shaman.
Yeah, you start going to the shaman, you start looking for something. So if you look at all the institutions of society, educational institutions, academia is at all-time low in faith and credibility, because they lie. They tell all of us, just a second, they tell all of us MOOCs are bad, massive online courses. They don't provide the same quality of education as in-person education. Then COVID comes, and they're like, yeah, all of our education is going online, and we're going to use the MOOC platforms like Coursera and edX, these other things, to distribute our educational platforms, but we're still going to charge you the same tuition as if you're going to an in-person course. And don't worry, the quality of education is not compromised. They say stuff like this, and people see the contradictions. They see the contradictions of COVID. They see the contradictions of the monetary policy when they print money out of thin air. They double the entire supply of US dollars, and then they destroy all the supply chains, and they say, don't worry, inflation's not going to happen. Then it happens 20%. And then they say, well, we were just surprised. We had no idea inflation was going to happen. Every time you do that, people pay attention, they see, they hear, and they say these institutions are broken, and they say I want to change them. So they try through the democratic process to vote, and you look at what happened with the infrastructure bill. I personally talked to over eight, I think it was 18 senators or 19 senators, I can't even remember, but I called them, and they all committed, every single one of them, left and right, equal amount of Republicans and Democrats. We will vote for an amendment to change the language. We had three-fourths of the Senate that were willing to do that. And then an 84-year-old senator, because they needed unanimous consent, steps up and kills any opportunity to amend the bill, knowing full well it damages a $2 trillion industry and hurts American jobs. So we did the right democratic process. We talked to our senator, we wrote letters, we went through the whole democratic process. We had a super majority of people willing to do something. And because of an arcane thing in the Senate, they were unable to change the ruling. And now we have to pass another piece of legislation and go through the whole process, Senate, Congress, presidential signature, to undo profound damage caused by even the people who wrote the bill said that that was the wrong decision. So if you can't change it through the democratic process, people just opt out or they get violent. Those are their only two options they have. And crypto is the nonviolent alternative. It's the opt out. They're saying, we're just going to go build other institutions. We don't know what the fuck you guys are doing over there, but we're done. We want new media. We want new healthcare. We want new voting. We want new money. We want new stuff. And we want it so it can't lie to me.
That's exactly the fundamental point. Trustlessness. When we juxtapose the crypto world with our traditional institutions, crypto is supposed to be trustless. We're supposed to be able to look at the code and have faith in what's going on. That's what makes DeFi better than centralized finance. You can look at the ledger and see what someone's margin is, how much collateral is withstanding. You can't have a situation uh, where there's sort of these shit loans that can go kapooey. You can see it, but I would raise I would raise a point that, again, bringing in the devil to put forth a sort of whole, and it may be a superficial question or a superficial issue that people will have, but with the exception of Bitcoin, which has Satoshi at the heart of it, an anonymous figure. Most cryptocurrencies have these cult of personalities that are their stalwart, that are their vanguard, right?
Right.
And with Cardano, it is you. With Solana, it is Anatoly. With Ethereum, it is Vitalik. And each person, right, despite the number of developers, the amount of activity on each respective blockchain, each blockchain has a person who is a person. Anatoly might be argued as being a little irreverent at times. Vitalik is suggesting synthetic wombs on Twitter. People point out your own idiosyncrasies. Someone mentioned that you once claimed to be Satoshi. There's obviously the sort of international man of mystery thing that you've got going on for yourself. You've got a lobster on your mic. At the end of the day, even though and this is a long way of asking this question, which is at the end of the day, even though you can sort of look at the code and the blockchain itself is decentralized to an extent, that's something we can argue about. How important is the person behind the chain?
Yeah. So a great example would be that there's these books written about the history of Ethereum, and they claim that I said certain things or did certain things 10 years ago. And it just, some of it doesn't even make any sense at all. Like, jump from an Apache. Yeah, I'd be dead. It doesn't even work that way. That's not a that's not a thing you do. But despite the things that are claimed and the attacks against me as a founder of the ecosystem, it seems completely inconsequential for Cardano's ability to grow and adapt and do these things. There are people in the Cardano ecosystem that are extremely harsh Charles critics that really dislike me and really dislike IO, yet they're still in Cardano, building things in Cardano, participating in Cardano. So, the founders are important because they get the party started and they set the initial state of the system. But one of the reasons why governance was the third priority, the third piece and the most complex piece of that third generation cryptocurrency mantra, is the concept of going from the initial state to a new state with a community instead of an individual or a cult of personality. So, Catalyst making more decisions every day. And over 12, 24, 36 months, you look at the trajectory. I could be fishing every day up at my ranch in Wyoming and doesn't really affect anything. I went to a meditation retreat last year in December, whole week silent retreat, didn't bring my phone. Nobody noticed. We had more transactions that week in Cardano than we did the prior 3 months. No scandals, no issues. Yet it's like it doesn't need a founder. It is nice to be emeritus, and you kind of get a better seat, at a restaurant. You get to be somebody, but it doesn't actually materially change the fact that the ecosystem has outgrown the founder. There's no Charles Hoskinson requirement. I don't sit and opine and think, oh God, what do we do? How do we do this? And there's plenty of people that are in Cardano that don't care for me, and especially the transplants from Ethereum. So there's real value here, but we hate Charles. So I think that you have to plan for obsolescence. You have to plan to fire yourself. And that's what Satoshi did. Even though he was around as an anonymous figure, he was still around and running Bitcoin talk forums, talking to people, emailing people, but little by little started communicating less and less and less. And around 2010, 2011 is gone, completely gone, left the ecosystem. And yet, despite that, Bitcoin is still around and still grows. There's an enormous reverence in the Bitcoin ecosystem to Satoshi. They've deified him to a point where Craig Wright and others are trying to take that throne to use it to legitimize themselves. But at the end of the day, the Bitcoin doesn't care about who Satoshi actually was. And even if you have overwhelming evidence that you were, no one would believe you because it's grown beyond that. And so Cardano has grown beyond that as well. It doesn't require me, or it doesn't require IO. There's dozens of core development companies that work on it, and the roadmap is fixed, and they're just about ready to vote on another major roadmap at the end of this year for the next 5 years. And we're just a single voice in a chorus of voices for these things. And it's nice to put on the resume, but it has nothing to do with whether the ecosystem is going to be successful or not. I think the easiest way of understanding decentralization for the listeners is imagine decentralization like a Jenga tower, and each company or individual is a block in that tower. And you want to measure decentralization, your functional way of doing that is asking yourself, how many of these blocks can I pull out before the tower falls over? So in the beginning, when it's all getting started, even Bitcoin, if Satoshi died of a heart attack right after he launched the network, there'd be no Bitcoin because there was just a single block in the tower. The whole thing would come collapsing down. But then all these people came in, they added more robustness and resilience. And now at a point, you pulled out the Satoshi block, the tower is still there. Well, you could pull out the Charles block, and Cardano's still here. 3,000 stake pool operators, 15 development companies, $1 billion community fund, huge ecosystem, 2 million people, and so forth. So that block doesn't matter anymore. Yeah, people who don't understand that, they say, well, we're really going to kill that block. I think Lara's got a book coming out next month. It's going to kill that block. We're going to get rid of that Charles guy. Yeah, there you go. I'll show you Cardano's centralized. Then they'll find out, much to their horror and surprise, that the ecosystem is still around. Go figure. So I'm proud of that, Frank. I really am, that we built something that transcended me and built something that transcended anything I could come up with. And we get just as many ideas from the community as we do internally. The final point is the academic process. And I think this is something that's missing from most of the projects. Another reason why you do peer review and you write papers isn't just about the checks and balances of is the work right or wrong. What you are doing is you are taking a decentralized brain and loading it up with a desire to go and think about the science of the ecosystem. There are dozens of academic institutions, graduate students, postdocs, professors, all these people I've never met, never dealt with, never shook their hand, that are right now writing papers about Cardano technology. So if the community needs a brain, they need somebody to solve a hard problem, like how do we make Cardano post-quantum? They have a call to action. All these people in the academic community will stand up and say, we will write the papers for you. The only other project I've seen that has achieved this level, there was only two, is Ethereum and Bitcoin. When Vitalik was having a lot of trouble with Casper, suddenly academics from Stanford and from Cornell and other places started standing up writing papers and kind of helping the Ethereum ecosystem along figure that out. And similarly with Bitcoin, there has been hundreds of publications across the world about Bitcoin related technology and how to make it better, some of which has now been brought into the Bitcoin ecosystem. You'll notice something, none of those things are Charles dependent. All of those things are completely independent, and people have differing incentives. In the case of these guys, they're looking for citations and academic careers. They're publishing papers to climb that food chain and get tenure and so forth. And these are fun, sexy problems that have high publishability. So, what we've done with the academic process is we actually outsourced all my initial ideas and my company's initial ideas to a broader, culturally neutral, linguistically neutral set of people that are always around. I'll die, but Stanford's probably going to be around still. Harvard's still going to be around still. There's thousands of state universities all around that are still here, and they have an incentive to keep innovating and keep developing, especially in our ecosystem, because we showed them they get citations, 10,000 citations with the Cardano paper portfolio so far, and we're just getting started.
Well, I think a lot of people couldn't imagine Cardano without Charles, but there may be a day in which Cardano can fully transcend you. I want to thank you so much for coming on the show. This has been really enjoyable and interesting. I appreciate you taking on some of the more difficult questions, or not necessarily difficult, but maybe leading. I have a tendency to ask some of those from time to time. Thank you so much. Enjoy the ranch. Enjoy the lobster. What's the deal with that, by the way? What is this thing hanging over your mic?
Well, this is just a great case study in the power of decentralization. So,
Okay.
I bought some stuffed lobsters for the office because we have a dog that runs around the office, and they like them as chew toys. And I put one of them on my microphone. People started talking about the lobster, and eventually people started creating NFTs, artwork. There's a graphic novel that's coming out. And then I said, well, let's write a smart contract. So we used it actually to test concurrency. We created something called the lobster contract. We had thousands of Cardano people come together and actually interact with the contract, and it actually named the lobster. So the name of the lobster is Logan. That's just an example of what happens when you have a decentralized ecosystem. You have an initial value, in which case a stuffed lobster on the microphone, and then you, if people like it, 3 to 6 months, 9 months, it develops its own life story, its own name, its own background, its economic value. If I was to turn this thing into a proper NFT and sell it, I'd probably sell for $1 million at this point. That's just a great case study in how you lose control on these types of things. And it could be as simple as a stuffed animal on a microphone, or as complex as a voting system or a consensus protocol. That's really the magic of what we've done as an ecosystem, and really a a lesson about how quickly things change, and who's on top versus not on top anymore.
Might also be evidence of this market's frothiness. $1 million stuffed lobster.
I don't want to get any shit for that. If they're selling fucking pictures of bananas and rocks for $5 million, you can't tell me a lobster that thousands of people named is somehow not so valuable. But anyway,
Well, what is value? That is kind of a question for an entire episode. But Charles, thank you so much for stopping by the show. We're thrilled to get this one out. Once again, we've been joined by Charles Hoskinson, founder of Cardano and CEO of IO Global. Charles, it's probably an irrelevant question. It's very easy to find you, but for listeners who might want to learn more about what you're doing, where can they figure that out? Lobster.io or
yeah, something like that. Yeah, iohk.io is our website, and also my Twitter feed at iohk_Charles. And so if you just Google my name, Charles Hoskin, Twitter, it's the first result. And that's usually the easiest place to find me. I have about a million followers there. And as much as you say I'm an international man of mystery, I'm pretty simple. I usually stay around Colorado, Wyoming, and you'll see me roving around the Boulder area or roving around the Cheyenne, Laramie area, from time to time. And
well, if you're in Cheyenne, just tap him on the back of the shoulder.
yeah,
Charles, thanks for being on the show.
thank you so much. This was a lot of fun.
The Scoop will be back with you again with another great guest. Have an awesome day.